Mayuresh, good afternoon. Thank you for joining us. What is your take on the market? Because if I look at the list of outperformers, Mayuresh, it's quite an interesting one. You've got Bajaj Finance, Bajaj Finserv, Page Industries, HUL, Dr. Pathlab. So the good old haloed stocks are again making a comeback. In fact, they have not corrected only.
Afternoon, Nikunj. So first of all, I think congratulations to you and your team on completing 9 years. Wish many more to come and a lot of success your way. A large element in what you were probably mentioning and quality actually holding up at this point of time. Again, I think expensive stock at these, whatever you mentioned, Bajaj Finance, Bajaj Finserv, but a large element in terms of their earnings profile has remained extremely strong over the past few quarters. So barring aside 2 quarters post demonetization where the entire recalibration happened, not just for these stocks but for the entire market as a whole, I think the comeback has been equally strong, and the different subsets out of which they operate and the kind of moats that they've created, I think clearly are redefining these leaders out from the others. So I think the premium valuations probably in a certain way justified because of the earnings momentum that these stocks have displayed. Can they continue with these earnings momentum is the question. And again, I think even if the base gets lowered a tad bit, and looking at a lot of management commentaries specifically from Bajaj Finance, Bajaj Finserv, where you might have some impact in terms of their borrowing costs, I think the yields are expected to get maintained because of the pass-through effect. And again, I think the growth that they probably expect in their core business, whether it's consumer durables or auto lending or refinancing of farm equipment, that still holds good. Similarly for other stocks like Page, I think the outlook that they've probably mentioned at this point of time, the calibrated approach in terms of opening up new stores and the kind of benefits that a very strong balance sheet gives to the return ratios is commendable, which probably holds up their price. So yes, I think the valuations on the higher side, I think sticking with quality does make sense in these markets.
Take Solutions. I don't know what's going on there, but the stock is up and it is up very, very smartly. CK, how should one approach a Page or a Bajaj Finance or a Bajaj Finserv? I mean, the chart of Bajaj Finance or Bajaj Finserv reminds me of what HDFC Bank has done in the last 10 years. Irrespective of how good, bad, ugly market conditions are, HDFC Bank just chugged along. Bajaj Finance now seems to be replicating that entire chart, if not exactly, I mean almost 90%. Okay, CK is not there. Mayuresh, if a client calls up and says, Mayuresh, Bajaj Finance, it was a 900 rupees 3 years ago, 3.5 years ago, it has now become 25,000, stock and split adjusted 2,300. How would one approach this stock now?
So Nikunj, as I mentioned earlier, I think you probably are looking at this franchise in terms of the quality that it possesses. And again, I think the kind of changes that the management has done through the own business model as well. So I think the kind of LAP funding that they used to do a few quarters back, I think they sensed it quite early that there might be some amount of bumps specifically within this segment of LAP. So I think they slowly dwindled down that book and focused on their core business of consumer durable lending. The second element in incorporating technology and what they've probably done, for example, with their cards, I think that has been an innovative move as well. So I think innovation plus technology, plus I think the forte that they probably possess in terms of its key strengths, including lending. And again, I think the competitiveness, even though I think it does exist within the industry itself, I think they're still holding out there, and the numbers are probably testifying that. The other element, as I said, in terms of them being able to maintain their asset quality in spite of market conditions which were probably abrupt, specifically after demonetization, and bouncing back very, very sharply in terms of their disbursements profile as well. I think the advances growth should be very, very stable for this company. So even on an adjusted book basis, though it's looked very, very expensive, I think the earnings should hold up in the near foreseeable future for this stock. And therefore, I think the entire premise of the premium valuation. So yes, I think if somebody is interested, I think a staggered way, probably looking at declines, getting into the stock over the next few weeks is the ideal way of looking at it.
But Mayuresh, give us your call on what kind of contra position would you take on IT as well as pharma in the wake of a currency which is getting weaker?
So afternoon, Tanvir. I think currency is just one aspect in terms of support to the earnings profile that both these export-oriented sectors derive. But a large element in terms of how the business prospects for both these sectors probably look, and they look very, very promising. So again, I think the bad news in terms of the pharma sector has largely got gestated. What you're probably seeing in terms of a lot of approvals coming through, not just in terms of FDA-affected plants, but also the generic pipeline that these companies possessed. I think it's clearly giving away some amount of respite in terms of the medium-term earnings. A large-term profile or a large-term outlook for the sector probably is that the compliance costs obviously will go down as FDA resolutions start happening. Yes, I think the kind of expenses that they've incurred on R&D in the past, that might still remain on elevated levels. But a lot of the niche pharma companies and the top tier ones have created a specialty pipeline. Example, Lupin, I think they've got 36 FTFs. You look at Sun Pharma specialty pipeline. Similarly, in the case of Cipla or Dr. Reddy's. So I think this specialty pipeline will hold both the pricing for them as well as their margins. And that should largely have the outlook over FY20 and 21 largely improve for these companies. So yes, I think as a sector look very, very promising. For IT as a sector as a whole, I think again the discretionary spending trends that you witnessed in retail, in manufacturing, in life sciences were very, very evident. What you've probably seen in the last 2-3 quarters in terms of ramp up, not just in terms of client deal wins, but again I think the optimization in terms of employee utilization internally, the onshore on-site mix, which is probably mandated a few quarters back, effectively getting played out. And at the same time, I think managing the attrition levels. So I think niche companies who are probably going to attract more and more orders in terms of their core businesses are going to do well. In terms of BFSI catching up with corporate tax cuts in the US and bouncing back very sharply, should support large companies like TCS and Infosys. So yes, as a view on the sector as well, I think remain positive, but I think you need to have a stock-specific approach within both these sectors.
Mayuresh, one very quick question on Motilal Oswal. Now, the fact that there is a problem with the HFC book, I think is in public domain. They've admitted that they went wrong with their entire housing finance business. But do you think this is one of those businesses you would like to buy, because when good businesses run by great managers, if they go through a temporary slowdown, then the market gives you a great buying opportunity. Would you be a buyer in Motilal Oswal, and would you bet on Ramdev and Motilal Oswal?
So because I think compliance does not permit me to speak about financial or broking stocks. But for the industry as a whole, I think the housing finance industry looks interestingly poised. What you're probably speaking about in terms of some quarters going wrong for a few of the companies, I think it's equally prudent to note that strong managements will drive growth. And again, I think the inherent demand that probably still exists is a good level playing field for housing finance companies. On the other hand, if you look at their borrowing mix, a large element in terms of where the borrowing comes from is bank borrowings, but a lot of these companies have resorted to other means. So NCDs, commercial paper, for a few of the rural financing companies or gold financing companies within the space itself, apart from HFCs, I think a lot of these NCDs are probably coming in for repricing, so they might get repriced at a lower level, which means that the kind of push through that they've done in terms of MCLR rises, I think gets offset in terms of NCD cost actually coming down, enabling them to maintain their NIMs and spreads. So I think selectively strong capitalized housing finance companies who are probably catering between that 15 to 25 lakh ticket size with a lot of thrust on affordable housing, both rural and urban, by the government, should be impetus for a very strong earnings growth for select HFC companies. So I think certain HFC companies in the past that we've like Diwan Housing continues to be there on our conviction list, along with GIC Housing Finance, where our own belief is that the stock probably in terms of asset quality pressures should start seeing receding coming down and credit costs come down. So I think as a bottom-up pick, Diwan Housing and GIC Housing probably only one.
Mayuresh Joshi is still with us. Mayuresh, coming on autos, we haven't spoken about that. Where is the value-adjusted bias there? I think a lot of the market is talking about interest coming into the two-wheeler space versus four-wheelers. So not Eicher Motors, because that's been priced to perfection. Really, Hero MotoCorp as well as Bajaj Auto, TVS Motors being in the line of priority.
So again, Tanvir, I think within the two-wheeler space, a large dependence in terms of how the monsoons pan out, and a lot of the two-wheelers who probably cater to rural demand are expected to do well, and a lot of management commentary surrounding discretionary demand actually coming up over the next few quarters in double digits in terms of volumes, expected to hold up the earnings for these companies. So I think within the space itself, Bajaj Auto has shown some decent set of numbers in the past. What you've probably seen in terms of stickiness in their exports markets, specifically the Nigerian markets, you're seeing some amount of hope arising out of those markets. But a large pecking order specifically within the two-wheeler space would be Hero MotoCorp as our top reference at this point of time. With the assumptions of a double-digit volume growth, margins expected to remain extremely stable and improve gradually. And the price hikes that they'll probably take because of the input cost inflations that we've witnessed over the past few quarters and months should start paying off effectively in terms of the top line growing at a decent pace. So though one might argue that valuation is probably looking a little bit fair at this point of time, I think the long-term outlook still remains strong. So I think Hero MotoCorp, Bajaj Auto probably remain one of our top picks within this space. Eicher obviously is an old favorite of mine. It does remain as a hold candidate for me. And within the four-wheeler space also, I think the kind of demand outlook that we might witness going forward in terms of both the farm equipment solutions business, specifically for Mahindra and Mahindra, as well as the expectations of 3 UV launches coming to a new platform as well, that should hold up its earnings. And again, I think the kind of valuation that they get from their subsidiaries, I think the overall SOTP valuation can be far higher than what the current market price is. So I think M&M, Maruti within the four-wheeler pack remain our top picks.
Thank you, gentlemen, for joining us and giving your insight about markets. Mayur, thanks to you too for taking out time and giving your views on markets and stocks which you like. Let's take a quick commercial break. On the other side of the break, we continue the show with interesting, dwellings into markets as well as some of the stocks which have moved not just today but throughout the week.